And we are back with the Sunday edition of the pre-market PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live at pulsewavetrading.com, home of the world famous PulseWave price trigger reports. All right, so jumping right into our first chart, we're looking at Disney. All right, the ticker here is DIS. And as you can see on Friday, the market did come back to fill the gap that was created on November the 17th. And now what the market has done is put itself in the position for a rally alert come Monday. Now, the market is in a bullish to neutral zone right now. All right, bullish to neutral with the rally alert. We had the crash alert that came down. Now the market's flip-flopped back to the rally alert. And this is all happening as a technical bounce off the 52-week lows. And the market's trying to build some kind of legs for itself so it can make a run at another rally attempt to get to the bottom of the Kumo cloud, which is at $100 even. So this is going to be an interesting one to see. Will the market get enough legs underneath of it to stage a rally, or the bears are going to come in and have their way? Keep in mind you are in a bear market, which means at any time, at any moment, without warning, the bears can relock in on the downside and take prices lower. So be very, very careful with that if you're thinking about getting long this market. All right, the next one that we are going to take a look at is Snap. All right, the ticker is SNAP. And this one had a technical rally from the bear market low made on October the 21st, and the market has been rallying since then. And now the bears are in the driver's seat as price action is struggling at the top of the Kumo cloud, which has proven to be quite the resistance zone. And we have a crash alert for Monday's trading on Snap. Next up, let's take a look at what's happening in the euro. So the euro is still elevated here. Prices are levitating. We have a bullish bias in the euro, which means we have a bearish bias in the US dollar. Current technical support is the top of the Kumo cloud, which is at par. So the market is trying to stay above par, and it wants to get back some of its losses, and it has a very long way to go in establishing that. But right now, the psychological support is at par, which is 100. Taking a look at gold by way of ticker GLD. And as you can see here, we got an alert of some secret selling on November the 17th. And then in the next trading session, we got that downside production coming. So although the market is still in the buy zone for now, we can't ignore that the bears are trying to relock in using this rally as a springboard to bring back down the price action. But don't panic just yet. Remember, on November the 10th, the market did gap up, and the market is yet to back and fill and close that gap. So I think the market will find some support at the $160 mark, which is the top of the Kumo cloud, which is going to be the initial support. All right. So I think that will be a technical springboard, and that the bulls will come in and try to defend at the top of the Kumo cloud. But the bears are trying to target this market and bring back down the price action, trying to relock in on the downside. But like I said, for now, nothing to panic, but we did pick up the secret selling, and then the next day, the price action dips. So that's not a coincidence. All right. So definitely follow the instructions listed on the report if you are trading in gold. All right, looking at the Russell, which is ticker IWM as in Mark. And this one is, the outlook is still bearish. You had the crash alert, you got the initial downside production on a gap down, and then on Friday, the market came and closed that gap. And it stopped short at the top of the Kumo cloud, which is acting as the initial support now. But I'm expecting more downside to come. So this one, the outlook on this one is still bearish at this time. Next up is oil. So we've been talking about the technical aspect of oil. And as you can see, the market now is really starting to come down from that initial crash alert that was received on the 14th. And then you got the confirmation on the 16th. And again on the 17th. And then the 18th, you got that downside production. So we're looking at more downside to come. Top of the Kumo cloud at the $240 mark is the initial downside target. So that's quite the ways down. And I do believe that the market is showing us that that's where it wants to go next. Taking a look at the NASDAQ 100. And you can see here that you had the crash alert as well, just like the Russell on the 16th. Then you had the gap down, then you had the cover. And on Friday, you can see the market is right in the middle of the Kumo cloud. So this one has a bearish outlook as well. I think the market is threatening to come down and fall outside of the cloud. And one of the reasons why I believe that that is where the trajectory is going is because of the gap up on November the 10th that has not yet been reconciled. So the market does need to come down to at least close that gap. Next up is silver by way of ticker SLV. And as you can see here on November the 15th, we had that crash alert, and then we've gotten the downside production. The market back and filled on Friday, and I think we still have more downside to come. Top of the Kumo cloud at $18 an ounce is where SLV is heading. That's the gap that was made back on November the 4th. I think that's what's going to take the market down. I think we'll at least will come down and test that between 1850 and 18. I think that's where the market is going right now. All right, taking a look at the S&P 500 by way of ticker SPY. All right, so same thing here. All right, you had your initial crash alert, downside production, back and fill, and now we have a crash alert for Monday's trading on the S&P 500 as the $390 a share is the top of the Kumo cloud, which is acting as initial support. And I believe that once that is broken, the bottom of the Kumo cloud at 370 comes into play. So we're looking at the potential for a $26 down move per share. And part of that is because of the gap up that was made on November the 10th, and the market did not back and fill that gap yet. So that gap needs to be reconciled. So I see the S&P, just like the Russell and the NASDAQ 100, coming down to fill and close those gaps. Looking at the long bond, ticker TLT. So again, you got here at the bottom of the Kumo cloud, and it's acting as key resistance. And you're starting to see the price action retreat from that. You also have the gap up here from the 10th, and I believe that the market is on its way down to at least close that gap, if not continue to fall further. Again, bear market rally, having problem at the bottom of the Kumo cloud, and this is an area where we can start to see bears to re-enter the market. So again, for now, they're in the green zone. So I think the bears will be defending intraday pullbacks in the long bond for now. But the bottom of the Kumo cloud is acting as a key resistance. All right, we talked about the euro. Here's the US dollar by way of ticker UUP. You had some gap downs on the way here, and all your price actions below the Kumo cloud, and the market is in free fall status, even though it's been consolidating and moving sideways. I think the next leg down is going to be quite steep. So prepare yourself for that if you are in the UUP. All right, looking at the XME, which is our metals and mining ETF. And I think the bottom of the Kumo cloud and the top of the Kumo cloud being that you're in a narrow space, I think that the key support is going to be around the $46 handle. And if that does not hold, this market goes into free fall, and then we'll probably be headed toward a new 52-week low. Next up is the pound sterling. And of course, pretty much every market is in a bear market. So you had the crash alert coming into to Friday, and we got that narrow range inside day. So I think that's coming next, and that's the potential to drop back below 115. All right, so I think the pound sterling right now is due to drop back below 115 and could even trigger a free fall status. But you are neutral to bullish right now, believe it or not. You're in a neutral to bullish zone. So I think the sideways action from the crash alert is what is to be expected. But as we start to now move into new trading week, I think lower is the possibility because of the crash alert. And remember, this can lead the market 3 to 5 days out. So even though you're in the green zone and now you just went neutral, I think that the market is ready to turn back to the downside. All right, and taking a look at the Bitcoin futures right now, you can see this market is still consolidated. It's in the neutral to bearish zone right now. Actually, no, I take that back. This is full blown neutral because you had your bullish and bearish converging together, and now you're locking in with neutral. So I see this sideways consolidation to continue for quite some time because now the neutral has come in. So this is a full-blown confirmation of a sideways action. I don't see the market really doing too much. But because you're in a bear market, as the markets are moving sideways, you may get some kind of bearish bias in there because you're in a bear market. But for the most part, I see price action just remaining in the sideways trading range. All right, looking at Ethereum futures here. And you have the same thing, but a little bit different. All right, so the bulls have left the building, and now it's just the bears. So you're neutral now. The bear trend has been neutralized. Sideways trading for the foreseeable future is to be expected. So no trend there as well. Market is just consolidating and doing nothing. All right, so let's see here. I see some of your requests. Let's go ahead and knock some of these out for you. All right, so you want to see DLO. All right. Let's see DLO. All right, this looks like a new security. So it doesn't meet all of our criteria, but here you go nonetheless. All right, so you just had new 52-week lows, and then you got some rally alerts from that. So I see upside on this one. Bottom of the Kumo cloud around $22 a share is the initial upside target on DLO. All right, next up we got, let's see here, QH. All right, here we go. Looks like this one is traded on the NASDAQ. It looks new too. Not enough data, so it's not going to meet all my criteria, but nonetheless, this has been consolidated for quite some time around the 52-week lows, and you just retreated from the bottom of the Kumo cloud. So this one is still bearish, still in a bear market. You had a little bit of buying that came in, lifted it a little bit, but not a whole lot. Then you had this pop here on the 15th, but nonetheless, you're still consolidated with a slightly bullish bias on this one, but it's still very much consolidated. All right, now the next one you want to see is COSM. All right, and this one's also on the NASDAQ 100, the Cosmo Holdings. And this looks new too, not a lot of data. All right. On this one, yeah, this doesn't meet the criteria either, but nonetheless, you're heavily consolidated here. You're in a bear market, and yeah, this one is flat, all but flatlined. There's nothing going on here either, just more consolidation. All right, the last one will be UEC, the uranium ETF. Let's go ahead and get that up for you. All right. I believe this one is on Dex's watch list too, on your dashboard. Okay, so this one's been consolidated also. A lot of these are consolidated, and you've been neutralized now. You were bullish off the technical bounce, and now you just went full blown neutral. So this one is neutral as well, flatlined, and you can see here all the colors, which means you are in a sideways consolidated market. So this one's not going anywhere either. All right, you guys know what to do. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.